Hi, my name is John Ribello, and this is the Bullion Vault. Hi, Willem, how you doing?
Good in yourself, Dion.
Good, thank you. So this is episode 49. So we are now getting to that point of almost at 50, and we've been doing this for now over a year, and it's been interesting. I think the journey that we've had from when we first started out in December of 2024, the podcast, we've had quite an interesting journey, especially with precious metals.
Definitely. Well, firstly, I think some cupcakes are in order for the next one.
We're gonna definitely need cupcakes. Note.
And then, yeah, I mean, if we look at where it's come from at that time to where it is now, it's actually quite insane. And the last month has been, I think, all of that rolled into one.
So yeah, I think today's podcast we wanted to chat about the current war, the U.S., Israeli, and Iran war, and the ramifications of that, and how it's now really starting to affect globally oil and fuel and so on. But I think let's just quickly do a quick summary of the precious metals since year to date, and then over the last month or so, so we can kind of have an understanding. I mean, at our last podcast, which was roughly about 4 weeks ago, the prices were a lot higher than they are compared to today. Yet we know that they were even lower a week ago. So we on a rebound and we start to rebuild.
Mm. Yeah, I mean, if we look at it, the war has had a massive, massive impact globally on economic systems, on commodities and such. I mean, we won't go into what's happening and all of that, the politics behind it, but we can definitely look at the economic factors behind it, what the effect, the result of this war is. And over the past month, we've seen headlines. Oh, it's crashing, the bottom is falling out, it's over for precious metals. Um, and I mean, let's not sugarcoat it. It's taken an absolute beating, but no, the bottom hasn't fallen out. It's not over. It's not a case of get rid of every piece of precious metal you own right now. If you do that, you're gonna lose. It's as simple as that.
So let's just put some context from the pricing from the beginning of this year to where we are now. Are we still up in gold and silver, or where are we?
Except let's take that from the start. So the first thing we looked at is the peak, the all-time highs. Now, if we're looking at gold, we've got $5,494, so
Yes.
5,600 just about. And that has dropped to 4,557. So that's quite a substantial amount. It's 18.5% drop from the peak. And all of these peaks happened in the within the start of this year, like before mid-Feb, I think.
Mm.
All of these peaks happened. So it's quite recently. And so yeah, the drop from the peak to where it is now is 18.5%. However, if we look at the year to date, we started 1 January, gold was at $4,321 an ounce. Right now it's $4,557 an ounce, which means it's still 5.5% up year to date. Now, silver, a little bit less rosy. We saw silver absolutely shooting for the moon. We saw it climb to $121 an ounce, and that is insane. I mean, I remember earlier in one of our early podcasts, I think it was the first one of the year, we sat here and we speculated when will it hit $100, and I think it was within that week, within the next
Yes,
few days.
and it smashed it.
Yeah, it hit 100 and kept climbing, and it peaked out at $121. So right now, obviously, it's sitting at $72.50 roundabout there. I mean, I did this a few hours, like 2 hours ago, while I was doing some prep. So it might be a little bit higher now, but it's sitting around there, and it seems to have kind of found a stable-ish home in the 70, round about the $70 mark. So that is a 40% drop from the peak to where it is now. I mean, yes, that is massive. It is a substantial drop. However, if we look at year to date, once again, $71.46 on January 1st, I think was the close. And now we're looking at 72.50. It's 1.5% up year to date.
Yeah.
Not massive, but we've seen silver sort of wobble up and down, staying around, climbing maybe 1%, falling a bit in previous years. So, if let's say I went to sleep on the 1st of January and I woke up now, it's literally a case of, okay, well, silver's still going.
And that's interesting. I mean, you think about it is, as you say, from the 1st of January until now, the prices are up. Yet, if you, as you mentioned, and it's so, the media at times is so sensational about it. I mean, I read an article, I think it was yesterday, where gold has had the greatest drop in 76 years. And yes, there's context. We've never had the prices rising over the last year as they've done, ever. We've never seen gold or silver and platinum to a degree rise to the levels that they have over the last year. We're going to have pullbacks. We've always said this. To what degree? Well, they're a lot higher. And there's a lot of stuff. We're going to unpack that also as to what's causing these drops. But yeah, and then what about platinum?
Well, now that's a bit more of a bleak picture. So if we look at the peak, it was $2,923 an ounce. So it was just about touching $3,000 an ounce. That has pulled back to $1,964 an ounce. And that's a 32.8% drop. However, in this case, if we look year to date, it started off at $2,359 an ounce, which means it's actually decreased by 16% year to date. Now, as we know, platinum is a bit less of a safe haven sort of commodity. It's more industrial. Its demand, I think, ebb and flows a bit more.
Yeah.
People sort of get into platinum and then, oh, I want platinum jewelry, and oh, let's invest in platinum and that, and then a few weeks later, nah, platinum's over.
Yeah, I think you raise a very valid point for the case for platinum, and in a time of where we are right now with international conflict and a lot of polarization politically, again, economically, the need and the growth and the demand is very heavily relied on from an industrial perspective for platinum, and hence that there has been that pullback. Again, I do believe that we will see the prices to continue. We've spoken at length about platinum and its place within the hydrogen and the green economy at a larger scale. So there's by no means is platinum's day done. I think it will rebound, and even last year, if you look, I mean, it started off very slow. It was very slow behind gold and silver throughout the year. It was only into that last quarter where it really took off and really pushed up and ended up being probably, I think, in growth percentage, the biggest performer of 2025.
Well, that's the thing. I mean, as you mentioned with gold and silver, we haven't seen this kind of growth pretty much ever. Platinum wasn't an exception to that. If we look at 1st of January 2025, it was sitting at $896 an ounce.
Yeah.
It 1 year later, it was sitting at $2,300 an ounce. Now, we've seen it time and time again. You don't get that massive climb without the correction at the end of it. And once you reach those prices, people are going to start, well, firstly, they're going to start taking their profits. So there's going to be a sell-off that's going to prompt more selling in the market, and basically that's going to drive the price down. But right now we're sitting in an absolutely perfect storm globally with the whole situation in Iraq at the moment.
So yeah, I think the main part of our discussion today was going to be on war. So let's really understand that. We saw that the US, without telling anyone, and I mean, I think surprise is the greatest part of any war, is you want to surprise the people you're bombing or invading or however you want to look at it. And they went and chose to invade over a weekend on the 28th of Feb. They then bombed Iran, and subsequently, what they thought would be a quick done in a week, and we now got the balance of power. They haven't. This last weekend, of course, all this last week, there was a lot of discussions with the US and all their allies, and the likes of Australia, Germany, France all said, sorry, mate. Sorry, you never informed us that you were going to be invading, and now you're seeking us to assist you in this war, which we had no opinion. You didn't have ask us for our opinion on what you needed to do, and yet you went and did it. So even his own allies are now pushing back and saying, sorry, you created this, you must sort it out.
Well, I think it's because the entire world is feeling the pinch of it.
Yes.
It's not some isolated explosions happening somewhere randomly that doesn't affect us. Um, I think the biggest weapon that Iran has is the Strait of Hormuz, and what we see there is it's the lifeline of oil coming from there. 20% of the world's oil flows through that strait on a daily basis.
So you've just nailed exactly what I was going to talk about is the Hormuz Strait is as far as a key location. As you mentioned, internationally it is. And this is the thing, is Iran has basically said all countries that are BRICS based, you're welcome to come and take delivery of your oil. If you are American, sorry. And if you support America, no. So they've kind of, through a geolocation, have created almost an economic war here. Right now, and I was listening to American news 2 days ago, and they were talking about the biggest hit industries right now in the US is on two fronts. It's the farming community, which is mainly the diesel with all their big machinery, but secondly, oil supplies fertilizer, and they're not able to put fertilizer down at the beginning of a season. It's spring in the northern hemisphere, and this is the time where they're preparing that soil for the next season. And now suddenly there's massive shortages on both diesel and also fertilizer.
Well, that's the thing. Oil isn't just dinosaur juice that you put into your car to eat. um, it's a lot more than that. It's fertilizer, it's textiles, it's plastic.
Yeah.
Oil produces all of those things, and now we're talking about the US being hit by the oil shortage, and we've got President Trump on the TV saying, "Oh, we are the biggest oil producer in the world. We don't need it. It's all the other countries that need it. They must sort it out." Uh, yes, the US is the biggest oil producer in the world, but they produce the wrong kind of oil. The oil coming from the Middle East is the thick crude oil, the thick dark crude oil, while America produces lighter oil. And the funniest thing is that America's factories, their refineries, everything is geared to refine the thick dark crude and not the light crude that they produce. So they might say we're the biggest oil producer in the world, but they can't refine, they can't utilize the oil that they are actually producing effectively, and retooling all of those refineries is going to take a decade.
Interesting also, and again, this is where we're seeing this polarization. And again, it was in the news where in China they had over the last week had done naval exercises with their two new super destroyers. Is that not timeless in this whole mix of politics that's happening? And again, if we go back to those things, and I mentioned BRICS, and I think this is going to become quite crucial within this war, is which side are you on? As far as where we are, we've always had a Western point of view, but other people within our own country would say, no, no, we've got an alternative point of view where we support Palestine and we support uh, China and complete opposites. So again, I think this is going to start challenging a lot of that.
Yeah, it's gonna be quite an interesting time. We'll have to see how long this conflict is still gonna drag out. I mean, from things that are coming out of the White House, or more specifically from Mr. Trump's Truth Social feed, it seems that he is quite eager to see the back of this. Um, But another interesting development that has happened now, because you're mentioning the BRICS nations, you're mentioning China, is that Iran said, sure, the oil can come through as long as it's paid in yuan. So that is a massive shift, you know, and countries are actually doing that. Countries are saying, fine, that's great, we'll pay in yuan instead of dollars, because that has been one of America's greatest tools is the petrodollar.
Yeah.
You know, they basically controlled the oil market because everything was being sold in dollars.
You talk about that, and it's quite interesting that, and again, as I mentioned, this is part of this whole strategic play, and you can see Donald Trump or the US, as far as their foreign policy right now, is to try turn this to their advantage, and it's kind of blown up in their faces. You see even within America, I mean, the Senate did not give approval to this. I mean, literally, they were going to vote on it on, I think, on the Tuesday of that week, and of course Trump had already gone in and he already had invaded, or he wouldn't have said he invaded. He had gone to seek out strategic uh, installations where they believed nuclear technology was. Again, I mean, we remember a former president who went searching in Iraq for missiles and nuclear technology and overturned and had that president, regardless if you liked him or not, Saddam Hussein, he was murdered. And again, they never ever found these weapons of mass destruction.
It's, yeah, I think the US had a bit of a miscalculation. They thought they were going to pull a Venezuela, swoop in, grab the president, swoop out, and replace them with their own preferred candidate. And as it turns out, Iran is not Venezuela,
No.
not by a long shot.
And also on sheer surface size. I mean, it's a massive, massive country. If you look at the whole Middle East and you see, as you mentioned, the Persian Gulf and the Hormuz Strait and so on. I mean, on the one side is Iraq, that Iran, and then you got Iraq the central side, and then of course you got Saudi Arabia, and then the UAE and a few smaller countries in between there. And again, this has caused utter, you look at a country like UAE, which has Dubai, which is one of the central points. Same with Qatar and Doha. These are central flying points for all over the world. And yet, this has also affected delivery of goods. There's been delays on certain shipping containers going across the world, where they're now looking at sending it to all Saudi Arabia, and they're offloading in Saudi and then trucking it across the desert to those smaller countries.
Yeah, and that brings us to why the price of precious metals and gold in particular has been falling. Because if we look at what's happening, one of the biggest drivers behind the gold price since basically 2022 has been central banks, the purchasing of gold by central banks. And
Yeah.
that has really fueled the rally. And suddenly the central banks are going, whoa, 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 whoa. We can't be buying gold. We need to look at energy security. We need to look at economic stability. We need to look at um, all of those things instead of reserve diversification. So the money is going towards energy security, it's going towards food security, infrastructure, etc., etc., etc. All the money that was going to gold reserves is now being diverted to that. And, they're prioritizing those things over the actual diversification of their reserves into gold. And that has obviously been a big factor in what has been happening to the price of gold. So that has given it a massive knock. And then the other thing we need to look at is the dollar has been gaining strength, funnily enough,
Yeah.
because of all of this. The price of oil has shot through the roof. We're looking at, I think it's come down to just under $100 a barrel now.
Yeah.
I don't have the exact price on me at the moment. You can probably look that up. But it was over 100. It was way up there. And as I was saying, the funny thing is that the one who benefits from a high oil price is the dollar.
Yeah, so interesting enough, the current crude price is around $88.37. It had actually been just short of $90 a barrel. On the previous close, it was around $92 a barrel. So again, what's important here is there has been a strengthening of the dollar. If in the financial markets, there's been a move away from your alternative investments, gold being one of them, into bonds. So again, that's that shift. As you say, it's countries now starting to say, hold on, we need to prioritize certain things. As you mentioned, energy. I mentioned the supply of diesel, and so on. That there are shortages. I mean, even this morning, I was thinking about that we probably will need to start to be more considerate on where we're driving and how we're driving, because this is not going to end anytime soon.
Definitely. And what's happening right now is that countries and companies are actually prioritizing access to US dollars. So they can buy that energy, they can buy that fuel, they can maintain their supply chains, and rather than focus on accumulating gold. So it's a shift away from your traditional, because this is one of the odd things is gold is traditionally safe haven, and it's a shift away from that safe haven to prioritize, you know, the maintenance of those supply chains, of those energies, etc., etc.
Again, I think in the grander scheme of things, I do believe that this is going to be short term. I do see that switch back into gold. In fact, the performance of gold from last week to this week is already speaking of there been a definite turnaround. We've hit those lows, and there has been a definite recovery both for gold and silver. As you mentioned, platinum's a little bit down on year to date, but that does tell me that we've hit that bottom resistance line, and I do foresee that there may be some increases, but I do see it remaining quite lateral for the time being. As you say, as the world comes to grips with what needs to happen, and where each country stands on this.
Definitely. I mean, I was actually surprised right now when you told me that oil is under $90 a barrel. If we look at it, it's been sitting over 100, $113 a barrel, etc., etc.
Yeah.
And it's actually come down a lot quicker than I was anticipating. So, yeah, I think the crisis, as we've seen ships passing through the Strait of Hormuz, we've seen that oil being paid for in one. We've seen all of that. So, yeah, I think you're right when you're saying it's going to be short lived, maybe short in a relative um, frame of time. It might be a few months. I don't think it'll drag on much longer than that because it seems that most of the parties are already very tired of this war and would like it to end. I mean, so yeah, we have to see where it goes from here. What's going to happen with the Strait of Hormuz? Because it is probably the most important choke point in the world.
Yeah, again, I think there is a delay on things. So I do foresee that we will have a massive upscale or uptake in food inflation or general inflation. Again, because of the increase on the price of fuel, but also, as I mentioned, as byproducts of oil, your plastics, your fertilizers, and so on. So, especially within the US and countries like that that are going into their spring, mainly the northern hemisphere, of course, but where they would be utilizing fertilizers and that to start getting their whole agriculture sectors up and running and switched on. And now there's a shortage. That means there is going to be a demand in food supply on specific things. Again, if there's no diesel to power the machinery to do the planting, that also adds that extra problem.
It does, and the sad thing is, of course, the prices go up, but they don't come down.
No.
So we see the prices go up because of $120 a barrel of oil, and then it drops to $80, but we don't see that reduction of 40% materializing in our world. And yeah, it's a bit of a, I don't think this is doing anybody any favors. Whether it doesn't matter whose side you're on, it doesn't matter what you feel, what you think, what your view is on this war. It's not doing anybody any favors.
Yeah, so what's quite interesting, and I've been also thinking about this, is fuel in our country has shot up. I mean, we're looking at diesel. I think it's increasing at over 10 rand a litre, and thereabout. Again, this is what's interesting is uh, a half of our fuel cost are levies and taxes. Now, do you think government's going to jump in and say, "Oh, we feel for you guys. The prices have increased. We're going to cut back on our revenue collection." In fact, I see this, and it's happened before when prices went up, is government said, sure, the economy handled that. Let's just put some levies in there to fill that gap. People are used to those prices. Again, I do foresee that going to be the same thing, where once there is a stabilization of the fuel supply and prices do come back down, I don't foresee the fuel price coming back down.
Well, this is what I was just saying. We saw it go up to $120 or $110 or whatever a barrel, and we're seeing that fuel price increase. Now it's back down to $80 a barrel, but we're not going to see a 40% decrease. We're going to see the increase, and we might see, you know, a little bit of a decrease, 1%, 2%, whatever the case might be, maybe even 10%, but we're not going to see the decrease that is actually happening in real terms in the real world.
Yeah, and again, this is exactly what I was looking at. So it's going up eight rand, 8 rand 50.
That is absolutely insane.
Yeah, petrol is going up 5 rand per liter.
And the problem isn't the petrol going up five, it's the diesel going up eight because the farm machines use diesel.
Exactly.
The trucks use diesel, and that's the biggest problem is we're not bearing that 5% brunt. We're taking the full, or the 5 rand, we're taking that full 8 rand.
And again, that's where I speak of the food inflation and general inflation. I mean, that's going to be the next knock-on effect. Interesting enough, the rand has lost value to the dollar, has weakened to the dollar. On the 25th of last month, it was sitting around 15 rand 93. It's sitting around 16 rand 92 today. So again, we've lost a full rand to the dollar in the period of a month. And again, this also speaks to our local economy. For a long time, because of precious metals doing so well and us being a commodity rich country, it's kind of hidden a lot of the issues that we have, as far as our own growth rate and so on. Revenue has been up because of gold, the price has been up. So, of course, all of the gold sector has been declaring over and above normal profits. And here comes these cutbacks, and suddenly that's also going to have a knock-on effect on the full economy.
Well, it's interesting that you mentioned the rand to the dollar because if we look at January the 1st, it was 16 rand 51. This morning, when I had a quick look, it was 16 rand 88, which is, if I've calculated this correctly, I'm just thinking I might not have, but that's 2.2% that it's down. So, honestly, once again, if we take a look at the slightly bigger picture, then it's still not that bad. You know, and that's the thing is, I think a lot of what's happening right now is over sensationalized. We oh, it's the biggest drop in gold ever. It's the biggest drop in silver ever. Yes, it is, but just take a look at that little bit of a bigger picture instead of panicking and doing something quite frankly stupid like selling all your gold, selling all your silver. If you had bought gold, let's say you bought some gold, let's say you bought some silver in January. You paid your $72.50. Sorry, it was $71.46 for an ounce of silver. Then you saw the silver price climb to 120 and you thought, okay, I'm doing well. And then it started dropping. And at one point, I think it pretty much hit $60 an ounce. And if you had gone and you said, okay, that's it, I'm getting out before it drops any further, and you sold, you would have lost massively. And a week or two later, you would have said, what have I done?
Well, what's quite interesting, and I'm smiling because of it, is we had a client who sold a whole lot of silver in mid-January, and they had bought the silver 2 years ago, so they'd made a massive gain from it. And then into February, the prices shot up, and with that drop that we've just gone through, they said, "Hold on, they actually want to buy some more silver." And they actually bought at a better price than what they would have if they'd bought 2 weeks earlier. And literally, they made money on the first section. They kind of didn't lose any money, and they came back into it where their losses were not that great.
Mm. Well, that's the thing. I mean, if you had sold at the peak and then saw it drop to $60 and you bought, you just made a massive, massive profit. Now, obviously, it's pretty much gambling.
Yeah, of course.
So, if you hit that and you actually hit the timing on that correctly, you could make stacks of cash, but I wouldn't recommend it. What we're always saying is, and I think we've actually got it nicely in the back of you, building generational wealth.
100%. So, yes, there we go. So, just out of interest, now let's get back onto, and I had this question with a client yesterday. We were doing forecasting for the next 5 years. Where do we see gold going over the next 5 years? And we actually gave some very conservative outlooks on both gold and silver. And yet, I mean, when you look at the numbers, and we're not talking about the massive growth that was done in 2025, but you got those numbers.
Yeah, so basically what you asked me to do was give a growth projection for the next 5 years based off the last 5 years, and then one based off a more conservative growth of 8% compound annual growth rate
In dollars
in dollars, which is what gold has pretty much been going at
for
for
the
the
last
last.
55 years.
Yeah. So we looked at this, and let's start with something sensational. So
Okay, let's do it. I'm writing down the numbers.
so gold over the last 5 years have been growing at 20.62% compound annual growth rate
Okay, is that
in
rand or
dollars.
in
That's
dollars?
dollars. In
Okay,
rand
so
it was
20,
23.85%.
23.85%.
Slightly higher due
This is
to
CAGR, so that's
that's
annualized
CAGR. Yeah,
returns.
over the last 5 years. So this is obviously the differences between the rand weakening, etc.,
Yeah, yeah, yeah.
etc. We understand how that works. So we were looking at this, and then if we look at the 20.65% in dollars, where we were sitting yesterday, and here's the thing: yesterday when I did this, we were sitting at $4,409 an ounce.
Yeah.
So we were looking at that, and based on that, projected in 2031, you would be looking at $11,258
An ounce.
of gold.
So let's just be very clear here, because I found that quite interesting. 11,000.
258.
So literally a year over the end of this decade. So by 2030, 2031, with a conservative projection. And this is based on this is the top end prediction.
Well, this is the top end. Yeah, this was
Yeah.
based off the last 5 years, what it's done for the last 5 years. If we look at the conservative projection, now this is at 8%.
Okay, so and this is historical data in dollars, where the dollar has consistently done, gold has consistently done on annualized returns, CAGR of 8% per annum, and this is from 1971 until now. You got to also contextualize this. This takes a lot of massive peaks, but also a lot of dips, also a lot of lateral periods. The 80s was not great for gold. The 90s was also not great for gold. We saw a surge into the 2000s, then also a pullback, and then of course into the 2020s, which we are currently in, we saw that massive surge. So that's the photograph done in literally 30 seconds.
So if we look at that 8% and we do a projection based on 8% CAGR for the next 5 years, we're looking at $6,479 an ounce. So that's roughly $6,500 an ounce by 2031.
And again, based on where the pricing is now, if you had said this, see, 2025 has changed the perspective of gold. We've always spoken of gold being quite a slow mover, but consistently moving upward. And then, of course, last year happened where it just spiked and it continued to rally upward. But consistently, if we take that at 8%, and this is very conservative. That we saying that around 2030, we're looking at $6,500. That's nearly over $1,500 to where we are right now.
Definitely. And I mean, from what we've seen over the past year, what we've seen over the past 3 months, it's nowhere near out of the realm of possibility for gold to climb $1,000, $1,500 in the space of a few months.
Okay, but I want to just add to this. So we were going to work on that 8%, right? So now we, of course, don't live in dollars. We live in ZAR rands. Now, currently, we've seen that the rand has been quite strong to the dollar. We've seen it probably its strongest in a good couple of years. But currently, let's work on 17 rand to the dollar as the current value. So let's just change that. So $6,500 an ounce times that by 17. That gives you 110,500 rands per ounce.
Yeah, well, close enough of my predictions or of my projections that I've got here. It is 109,951. It's close enough to call
Give
it
or take. Yeah.
110,000.
Okay, but we know that, and I mentioned it very briefly, that our economy is not in great shape. We've had extraordinary revenues from the performance of gold. So of course, the real issues get pushed aside in this country. But we know that the rand is not in great shape, and we know that ultimately it will continue to devaluate to the dollar. So, and I was talking to an attorney yesterday where we said, let's look at about 25 rand to the dollar by 2031. I think that is very conservative. I believe that it will be there and thereabout, if not more. But let's work on 25 rand to the dollar in
So
2031.
so yeah, I mean, and that's exactly what I went ahead and did. So we're looking at the 8% and we're looking at 25 rands to the dollar, and that comes out to 160. Let me just
Jacob Zuma, yes. Now listen carefully.
no, listen properly.
Yes.
161,979. Close enough to call it
Yeah,
$162,000 an
let's just
ounce.
round it up. Yeah, 162,000. Okay, so this again highlights another point that we always talk about is holding your wealth in gold in a dollar hedged commodity, but it doesn't necessarily mean that it's dollar hedged because it is expressed in every single currency throughout the world and holds the same value. So if the dollar does badly, gold goes up. So let's just be clear on that. But of course, we're talking about emerging markets such as ours, where it is very sensitive to the movement of the dollar. When the dollar strengthens, we weaken, and so on. But also our own economy, and we've seen this with the likes of Argentina and a number of other countries where their value of their currency has lost massive, massive value. And we're not talking a couple of rands, we're talking a couple of hundred, if not thousands of rands to the dollar.
Well, yeah, and I mean, bringing it a bit closer to home Nigeria, the
Exactly.
naira has lost massive, massive, and we're talking hundreds of percentage points of loss.
Yeah.
You know.
So for us to peg it at 25 rand to the dollar in 2031 I think it is a very conservative outlook. But this is the important thing. Whilst everything else is going up, losing value, we've spoken about inflation. Here is an ounce of gold that you're holding that you bought at a current value in rands on 6,000 or 4,500. I just want to get that value.
Well, I mean, yeah, it's
So we're looking at 77,000 rand right now for an ounce of gold.
yes.
Okay, so at 77,000 rand, you buy it today, you hold it. In 2031, that's going to be worth 110,500 if the rand remains at 17 rand to the dollar, which we know it won't. So realistically, you looking then that 77,000 rand in 5 years from now can be worth 162,000 rand.
Yeah, and we've done multiple studies on this. We looked at Argentina in
Yep.
particular. We looked at them because of their sovereign default, how the currency has performed. They had a manual devaluation of the currency, and we looked at where it would have been had you held your million pesos in gold versus having that million pesos in the bank. And it's absolutely shocking how much you could have um, how you could have grown your wealth simply by holding it in a tangible asset.
Yeah. And again, I think this underlines the whole point of what we're talking about. We've spoken about the instability internationally of the current war that's happening in the Middle East. We've spoken about the inflation, the knock-on effects, the effect on food supply, and all of that. And yet, as the man in the street, we just receive the knock-on effects of this the whole time. And this is the one thing that the man on the street can actually do that can enhance their position, is by just making sure that these drops, and this is what I said to that client yesterday, is this is the right time to be buying. Take these drops, and it may drop a little bit more, but realistically, we know based on the overall international conditions, gold will remain strong for now and probably for the next couple of years.
Well, if we look at, I mean, yes, we've been talking about gold, but very few people can afford to go and buy that ounce of gold. But if we look at silver, we did the same thing with silver. We did that over a
Yes.
10-year period, and we had a growth of 16.5% initially on the silver. So if we apply that at the current um, rand dollar exchange rate, we're looking over the next 10 years, we're looking at about 5,000. $321 an ounce of gold, and we're looking at 5,000
Silver, you mean?
for silver,
Yeah.
sorry, silver. And we're looking at 5,462 rands
Yeah.
an ounce of silver from where it was yesterday at 1,186. Now, if we actually apply the South African version of that KGOL, which was 18.05%, we're looking at 6,233 rands for
For
an
an
ounce of
ounce.
silver.
Okay. Which currently is valued at give or take 1,200, 1,300
Round
rand
about
an
there,
ounce.
yeah.
Yeah.
And then we did the same thing with the more conservative 8% projection. And even then, we still looking at $2,560 rands an ounce of silver. If we factor in that 25 rand dollar to
Rand
rand
to
to
dollar.
dollar,
Yeah.
and now we're talking 10 years. We're not talking 5 years anymore. So it's even more likely going to be there
Even that and
or
more.
higher,
Yeah.
then we're looking at $3,772
Rand.
rands
Yeah.
an ounce of silver. So, it's not just, oh, I can't invest in gold. It's over for me. Silver is much more obtainable. And if we just look at it in pure numbers, in based off the history, looking and projecting for the future, you can still secure your wealth.
Okay, so a couple of questions to round off the podcast, and then we'll call it time. But scenarios. I'm an investor. I bought 3 weeks ago when gold and silver were sky high. I'm running at these massive losses. What am I going to do? Do I sell? Do I hold?
Don't sell. It's as simple as that. If you sell now, you're going to run at a loss. It's pretty much as simple. It's something you have in your possession. It's not the share of a company that is sitting somewhere on a spreadsheet, and who knows, that company might be going bankrupt in the next year or in the next month if it's running at these losses. So, yes, you want to get rid of the shares and get that money while there's still a company to speak of. Gold is different. It's here. It's
It's
in your hand.
tangible.
That's not gold. I wish it was, but that's actually copper. It's lovely, but it's tangible. It's in your hand. It's not going anywhere. It's not going to disappear once the price reaches a certain point. But if you sell now, you're going to run at a loss. The only thing you can really do is hold that and wait for that market to correct itself, and then start building again.
Okay, so, and I fully agree with that. Anyone that has bought on these highs. And again, it's interesting. We always go back to the Kindleberger and Minsky model of booms and busts, and this behavior is innate with humans. We see something going well, and everyone wants to buy and literally sell their houses, and then it drops down, and people say, "But why?" And the game is, and this is again so important, is buying of precious metals is not about today or tomorrow. Yes, the prices can go through the roof over the next 6 months, but we're not talking about that. We spoke about 5 years. We spoke about 10 years. That's where the real value and the real money is made in gold and silver. Does that mean that it will not go up even more than we say? Absolutely. In fact, I don't ever believe that the prices will be under our estimations here. If anything, I think we are on the low end of those targets, and I think they'll be a lot higher. I think $10,000 an ounce by the end of this decade doesn't seem impossible.
This is the thing. Unless you have to sell your gold because you need to go and pay your electricity or your bond or your what buy groceries. Unless you have to sell your gold, it's simple. Don't.
And what's also interesting there is where when people do have that need to sell, gold and silver are liquid. You can sell them. There are willing buyers in the market. The demand for silver is still very high. If not, it's at its highest point. In fact, you cannot get silver Krugerrands right now. They're not, sadly, it's a South African product that's manufactured in America, and they're not releasing the silver, they're not delivering. So that's going to cause a silver squeeze within this country, which I've already seen. You go and see the current price, as I mentioned, a spot price silver is right around about 1,300 rand an ounce. You will not get an ounce of silver in physical form for under 1,900 rand. If anything, you'll be lucky, and it will be a good price at around 1,800, 1,850 rands per ounce. And that does speak of that squeeze. That speaks of that a lot of people bought stock at a higher point, and to sell below that, they just can't. But the important thing, and this is what I was wanting to highlight there, is if you have got a problem and you do need to liquidate some of that gold to pay for this or to sort out that, gold and silver are liquid, that they allow you to do that, and you don't need to go and liquidate the full value of it. You can liquidate ounces to meet the needs that you need to as far as your financial commitments.
Definitely. And it's a lot easier now than it has ever been. You can literally walk into a shopping center and there's a little kiosk who wants to buy your gold.
Yeah. So, second question before we close: is this the right time to be buying?
Yes. I can't make it more simple than that.
Yeah.
It is the time to be buying. Actually, the right time to be buying was about a week ago when it was sitting at $4,200
Yeah.
an ounce of gold. It was sitting at $60 an ounce of silver. That was the time to buy, but we don't have a time machine, unfortunately. So I don't think you can get much better time to buy than right now.
And again, and this is part of the journey with precious metals, is that they may drop. So you might buy today at these prices. We do believe they are good value right now, and next week they may drop back down to those other prices. But the truth is, they will be start to move back upwards, as we have said, and they'll continue to do that.
Look, if we look at what has caused this, the main thing is the war in Iran, and there was a massive squeeze. The price of oil was up, and I mean, we ran through everything. Why gold was has been sidelined, and we are seeing a bit of an easing of tensions there. We're seeing that America really wants to talk. Iran not so much.
Well, let's be very honest here. Now, I don't choose a side in this. I remain apolitical, but I wouldn't want to be an Iranian politician, because you become the successor, and then you taken out, and the next one gets taken. So I think anyone walking around there right now has got a target on them. So the desire to be even talking anything with the Americans is not there yet. There needs to be some level of stabilization before any talks can be had.
Yeah, well, I mean, the thing is, we're looking at the oil price, and we saw that come down from $120 to 80 or
$88,
just
yeah.
under $90.
Yeah.
And that's already easing globally that pressure that has been building up. So that's why we're seeing the gold recovering. We're seeing that gold price building up again. And it pretty much depends on how long is this going to drag on. If it stops within the next week, then we might see the gold rally again. If it drags on for another few months, then gold's still a good place to have your money.
I also need to add this into the argument for gold is with the whole UAE and the whole Middle East closed or shut down or on restricted flights. I mean, I heard today that they're up to about 85% of commercial flights coming into the UAE. Is Dubai is one of the central points for the supply of gold globally. And with them being down for the last 3 odd weeks, that will cause a definite increase in demand for gold across the board. So that not going to affect, like I mentioned, with the supply of fertilizers and diesel, how it will affect food supply. The same will apply to gold, that we can expect within the next couple of weeks that upward trend coming back online because of that lack of supply in the global markets.
Well, not just that, we've been talking about it's 18.5% down on its peak. People are going to say, right, it's time to buy. People are going to start buying. Once that happens, more people will want to buy, and we've got the Kindleberger-Minsky effect going at it again.
There we go. Yes. Willem, in closing, any final thoughts?
I think we've pretty much touched on a lot. We've gone on for quite a while, but yeah, it's. I think the most important thing is, and I'll stick by this. I'll stand by this. If you don't have to sell your precious metals, don't.
Yeah, period. And I think that's great advice in that sense that again, and we always state this, it's you will experience short-term losses. So say you bought 2 3 weeks ago, yes, you are down on your investment, but gold is not a short-term play. It's the 3 5 10 year play, and that's where it's from. Even the numbers we showed today, realistically, even on the bare minimum growth that we can project, that is, and it's quantifiable based on the history of gold's growth over 50 years. So we can use that as a good yardstick to look into the future, saying lowest or most conservative scenario is this. And again, we do believe that it will be a lot higher than that.
Definitely. I mean, I don't think it's the end of precious metals as we know it.
REM, it's the end of the world
Definitely.
as we know it. Yes.
Definitely. And if you enjoyed the episode, leave a like. If you want to see more, be sure to subscribe, and we'll see you guys in the next one.
Thank you. Take care. Bye.